Welcome back to another Blackstar video. Thank you for tuning in. We're back at it again. We're going to talk about risk tolerance and let's get it. Yet again, welcome back to another Blackstar video. Thank you for tuning in. I'm back at it. Going to make you videos, new topics, new discussions. We're going to get into it. Hopefully you like the content. And if you do, please hit that like button and subscribe to the channel. So today's topic is risk tolerance. What is your risk tolerance? What are you willing to risk as you go on to this adventure in crypto, putting your hard-earned money and trying to get some type of reward, right? We're going to talk about everything that has to do with that, hopefully, and give you a little bit more clarity and hopefully help you make better decisions. Again, this is not financial advice. Have to say that always, because we don't want to get into any legalities with someone's investment behavior or conduct. So anyway, let's get it. So this website, the CorporateFinanceInstitute.com, they talk about risk tolerance. And risk tolerance refers to the amount of loss an investor is prepared to handle while making investment decisions. Several factors determine the level of risk an investor can afford to take. And these are the factors that influence your risk tolerance timeline, your goal, your age, your portfolio size, and your comfort level. These are very, very important areas that you need to consider, right? How much time you're looking to invest, right? What's your time frame, right? What's your goal, right? You're looking to make it for a vacation, or you're looking to do it to buy a house, or you're looking to buy a car? Are you looking to save for your kids? Are you looking to build a portfolio for your children and or yourself, so that way you retire a lot more comfortable, right? And what age group you're in starting this starting this investment journey. Your age is very important, and we're going to get into that a lot later on, where you'll kind of understand. But the younger you are, the more risky, the more time you have to invest. As you start to hit that 40 group, 50 group, remember, most people start to retire around 62, 65. You have a lot less time, right? You don't have as much time to be volatile and be risky, right? And when you're young, you want to be more aggressive. When you start to get older, you want to be more moderate in your investments. And then as you get older, you want to be 10 times more conservative, right? You want to know about your comfort level. How much of your finances you're willing to invest in the crypto, right? So let's say if you make $500 a week, right? Are you willing to put 20, 30 bucks into the week? Are you willing to put $100 and be more aggressive? Right, really, those are factors you really need to sit down with yourself and write it down. If you're married, sit down and write it out with your wife and talk about it, right? Like, you still have day-to-day responsibilities that you need to take care of, when you're dealing with your family and or yourself. And the younger you are, the more aggressive you can be. When you start to get into that midlife, 35, 40, you want to be a little bit more moderate. You get a lot older in your 45, 50-year-old bracket, you want to be 10 times more conservative. If you're starting out investing at 55, you want to try and be a lot more conservative with your investments, because you don't have that much time to retirement age. So you just don't want to take a chance. And this is something important I'm going to go over real quick. Your risk tolerance types, again, about being aggressive, moderate, and conservative. Ignoring risk tolerance. Investors without considering risk tolerance can prove to be fatal. An investor must know how to react when a valued investment falls. Many investors flee the market and sell low in the process. At the same time, market declines can be a great time to buy. Therefore, ascertaining risk tolerance helps in making informed decisions and not make hasty, wrongful decisions. So, and the idea of crypto is that during these bear markets, everybody goes crazy. Some people sell, they lose some value. I don't want to say the wrong thing, but they're not too happy. But these are the times in this market, crypto is not going anywhere. It's not a scam. It's not a sham. It ain't fake. It's 100% real. So in this crypto markets right now, these are the times that you buy, because when it increases in value later on, that's the time you sell. And you sell and you have a profit. So if you want to buy that house, you have extra cash for that. If you want to buy that car, you have extra cash for that. If that was your goal. If you want to go on vacation, now you have extra cash for that. Don't be scared to buy in a bear market. Do not be scared. Manage your risk. If you bought high, mitigate it so that way if it starts to decline 5%, 10%, you'll sell off quickly. And then if you want to buy back in, maybe it drops down another 10, 15%. You can jump back in, but crypto is known to drop down anywhere between 85 and 95% depending on the actual coin. And our idea here is, as retail investors, is not to be the dumb money. We need to start being the smart money, just like the capital, just like smart money does. Major investment groups, VCs, venture capitalists, investment firms, they do this. They know when the market, or they kind of figure out when the market's at pretty high, and and it starts to become a little bit more volatile. People are going to start selling, and they sell, during those times, and they sit back and they wait. And what they do is they wait for the market to go down to where it's near bottom or where they think the bottom is at, and they start to buy back in. But remember, they're already in the profit. They're already in the profit. So it doesn't make a difference to them. So let's be the smart money. Let's not be dumb money anymore. Set our goals, our risk, once we invest, when we get in, what time period we get in, and when we want to get out. Or rather, the value that we get in at and the value that we want to get out at. Those are very, very important. So this website, thebalancedmoney.com, it talks about how you should invest on your age group, on your age category, and this is very important. And just quickly, how you invest can depend a lot on your age, and your portfolio could look significantly different depending on where you are in life. Start investing as soon as you can to take advantage of the power of compounding. The younger you are when you begin investing, the more time you have for your initial investment to grow and increase your personal wealth. There are investments you can make during each decade of your life, adult life, to take advantage of the power of time. So meaning that we don't have much time as we get older. But when you're in your younger age group, between, I'm going to say young adult 18 to 30, even 35, you have a lot of time. Even though this website says 30, I think that, and I truly believe that if you start investing, getting your kids to invest, or if you're watching this video and you're young, then between that age group, 18 and 35, is when it's optimal. You really have the most time to invest. As you become older in your 30s, even though you have 30 years to retirement, I mean, think about it. If you started investing at 18 and you hit 30, I mean, you already got 10, you have 10 years, 12 years already investing. If you're 20, 21, you have 9 years by the time you're 30, right? And you already have a significant head start against everybody else. So I highlighted these key takeaways. If you're 30 and you have 30 more years to profit from investment market before you're likely to retire, you can handle the volatility of the stock prices. Now's the time to invest aggressively. So in the state of crypto, within the younger bracket, you have more time, you have a better chance. Even the volatility of crypto gives you a lot more time to invest, and you should invest while the market is down. Investing while the market is down gives you the better opportunity to reap the rewards when the market increases in value yet again. So the people who say that crypto, you're taking money from one person to feed somebody else, that's the same thing in stocks and bonds and everything else. When someone's putting money into something and there is less of it, it starts to increase in value because of the demand. That goes for stocks, cars, houses, any commodity, any asset does this. It is no different anywhere else. So you want to try and get in low when people don't want the product, then later on sell it when it goes high. So in your 30s, you have more time to play with that, and you have more room to get into different avenues of investments. You can, in your workplace, your 401ks, your Roth IRAs, stock heavy portfolio, right? Which for us, I think is crypto. Start investing in real estate. Best investment for the 30s, again, is the workplace asset allocation. So asset allocation in your 40s may lean slightly more towards low risk bonds and fixed investments than in your 30s. In the case of crypto, I think that would be more so geared towards like staying in the top 5 cryptos, maybe the top 3, and then cryptos that have a really definitive chance of making it, and the teams are showing that they're really trying to make this asset prime. I mean, and you can never know. Look at what happened with Solana and FTX and everything else. You never know what's going on under the hood of some teams, but that's the opportunities of risk that we take. The opportunity of risk is that if the product and or asset that we're investing in we think is good, and then we don't know what's happening on the back end, we can lose it all. You can lose everything. The value of it can tremendously drop. Or because we don't know what's going under the hood on the back end, they can make a major improvement, and guess what? Now we reap the rewards. So those are the chances that we take in investing in anything. You can invest in a car, right? And someone's careless, transporting it, and it gets into an accident and you lose its values. It's done. And that's anything that you invest in. So don't be scared to invest. Invest with confidence, but be smart. Know how to invest. So I'm running through this website a little bit. Best investments for your 50s. Now's the time to examine your future goals and explore your current and desired future lifestyle. Investigate your current income, projected income, tax situation. The results of your analyst will influence you the best for investment in your 50s. So if you're in your 50s, you want to be 10 times more conservative and try and figure everything out on what you want to do appropriately. Don't go too crazy. Don't risk in getting all these degen coins, right? You're taking too much of a chance. Bitcoin, Ethereum, Cardano to me is a very solid project. There are a few other projects that are definitely solid. That's my personal favorite. I'm not giving anybody financial advice. Please don't take what I'm saying in this video as financial advice. And all the stuff that goes on that we're talking about in your 50s, being conservative, understanding your tax liability obligations, your goals, everything else should start at 18. It should start 21. As soon as you start investing, you should understand these things. Then you should try to write them down, jot them down, and get yourself together so that way, as you become more matured in investing, you know what you want. You're already there and you already have a set plan. Do this for your kids then. Help them out to understand when you're investing with them, for them, that this is the goal, the purpose, so that way they can have more comfortable lives as they get older. Right? And the goal is to always have additional income streams. So if you're on DeFi platforms or you're in projects that give staking rewards, those are pretty good. The same thing like stocks, right? It gives you dividends. You wanna invest in stuff that's giving you something back, right? But solid projects that'll give you something back, not just any project, right? So if you invested in Ethereum staking is now available. Problem with that is it locks your coins up. You have Cardano that gives you rewards. Solana gives you rewards. AVAX gives you rewards. There's a couple solid projects that will reward you for doing the right thing, right? For not just letting your coins sit. Algorand, right? There's several projects that are pretty solid. Again, everything's risky, that give staking rewards, and you can get a return on your investment in those projects instead of just having them sit there waiting for the value to increase. Just my opinion. So those are additional income streams. But on top of that, other businesses you might want to get involved in, right? Starting a business, starting anything, but looking at passive income is the most important. When you allow your finances to work for you, your assets are working for you, and you're not working for it. And then last but not least, we're going to talk about, and I know there's a lot more topics inside this article on this website, right? But diversification is important for investment and the strategies. Diversification is essential to invest in strategy. Vision. Don't put all your eggs in one basket. The idea that diversifying your funds across many types of investment, there is a high chance of something going well in a given day, month, and or year. One or two stocks you own might be down one day, but others may be up. This makes it less jarring to look at your account because the price fluctuates won't be as volatile. So it's like being in Ethereum, Cardano, and Bitcoin. So Cardano may go way down, Bitcoin may be a little bit more stable, and then Ethereum may be stable, the middle stable in between the two. Bitcoin's always going to, right now, because it's the mother of all crypto, will go up faster than everything else, and then everything else follows Bitcoin. Ethereum is holding on as kind of its own, but it does also follow Bitcoin at the same juncture, right? It does go up and or down at times with Bitcoin. So if Bitcoin tanks, Ethereum is definitely tanking. If Bitcoin goes up, Ethereum is definitely going to go up in value on a scale. So just think about that, when you're investing, on how that correlates on diversifying and where you should be at and what it would look like if you just invested in one product. That it also depends on what your portfolio looks like, right? How much finance, how much money you have to invest with. That makes a difference. You might not have enough money to invest and diversify, your money across. You might not be willing to do that, right? Because your risk to reward might be less, right? There's a good chance that I'm going to jump back to Cardano at being 27 cents. You look at it and you say, what's the chance of Cardano going back up to $1, right? That's 4 times their value, right? What's the chance of Ethereum going back to $4,000, right? There's a good chance there. So you need to really think about it. Is there a chance that Cardano can increase more than 4 times? Is there a chance that Ethereum can increase more than 4 times? Is there a chance for Bitcoin to increase more than 4 times? You need to weigh those odds and which one gives you the most favorable, so that way you know what your risk tolerance is in those groups. So in this website, the Motely Fool, fool.com, they said there's 5 things to know about asset allocation. The first one is adjust your asset allocation according to your age, which we talked about. Consider your initial risk tolerance, not just your age. Don't let the stock market conditions dictate your asset strategy, allocation strategy. Diversify your holdings within each asset class. Invest in a target date fund that manages asset allocations for you. So now let's relate this to crypto. Again, you want to adjust how you invest depending on your age group, right? You want to be less risky as you get older, and you could be more risky as you're young. So the younger you are, the more risk you're willing to take. The older you get, the less risk you want to take. So number 2, consider your innate risk tolerance, not just your age. You may have heard that age-based asset allocation guidelines take the rule of 100 and rule 110. The rule of 100 determines the percentage of stock you should hold by subtracting your age from 100. If you're 60, for example, the rule 100 advises holding 40% of your portfolio in stocks and actually the rest in cash, because you just never know what's going on. You may never know what you need the money for. Rule 110 involves the rule of 100 because people are generally living longer. It works the same way, but you subtract the age from 110. So I'm going to skip down. If you're 65 or older, already collecting benefits of Social Security and seasoned enough to stay cool through market cycles, then go ahead and buy more stocks. If you're 25 and every market correction strikes fear into your heart, then aim for a 50-50 split between stock bonds. You won't achieve the highest possible returns, but you will sleep better at night. So in our case, I would relate this more to like investing in coins and investing in DeFi, and solid DeFi projects, not just any DeFi project, right? You want to get not some fly-by-night, high APY, APR. I mean, those high APYs, they're dangerous. Anything that's giving you, they're saying they're giving you 20% and more, they're risky. Get in, get out. Get in and get out. Getting in and get out is also risky because you just never know. You really just never know what's going to happen. So be smart if you want to be comfortable. In this case, you can do maybe 50-50 stocks, 50-50 crypto. You might do 20% crypto, 10% crypto, and go into stocks and or bonds. Whatever makes you more comfortable. My consideration, I enjoy crypto more. So I make this channel, but my asset allocations are definitely crypto. I think crypto has the best benefit in my belief. I don't know what it would be for you, but just consider your odds, write the risk down, put it on a piece of paper so you can look at it. Visualizing these things are very important. And number 3, don't let the stock market conditions dictate your asset strategy. Meaning that don't let the FUD, don't let the hype and of people talking crap about crypto drive you away. Sit down, analyze it, look at the life of crypto, where it's been at and where it's gone the whole time, right? Its lows, its highs, is it constantly growing? There's people involved. There's people talking about crypto. There's countries talking about crypto, right? Countries are talking about Bitcoin. Just think that. Don't let stuff going down deter you. If you're a part of the high time, start buying low, which is a good strategy. Not financial advice again, but consider that option. Diversify your asset class. Maybe you want to go more into stocks. Maybe you want to go more into another coin, or you want to start diversifying yourself. But again, this has to do with the amount of funds you have. So you can't just diversify into anything and everything. It really depends on what you have, how much funds you have to invest. And invest in a target date. Look at that target date, the date you want to get out, right? You might want to do 10 years, 20 years, 30 years. What do you think this ecosystem is going to be at in 20 years? In the last 15 years, look how much this ecosystem has grown, right? From nothing, from pennies to billions of dollars. Billions of dollars are now invested in crypto. Crypto has actually hit $1 trillion market cap. And just think about that. We have a long way to go, a very long way to go. Now, I'm not going to talk about this subject, but this is very important. So if you retire at the age of 60, your life expectancy is a lot shorter. So you need to consider this. I know this is kind of gloomy, so I'm going to leave this up for a second, and I'm going to take it away, but just take a good look at that. We are living longer in this day and age, but you need to consider your risk tolerance when you're thinking about how old you are. So if you're in crypto and you're like 50 plus, you know, you don't want to be like the young kids. They can run around and degen their money all day long. Be smart about your money, invest wisely, and make the best out of it. So while you're investing in anything that you invest in, be very wise about what you invest in. Don't be foolish. Don't be careless. Try not to be anyway. You know, we all don't know everything. We don't know when the market's going to go up and down. We don't know what's the right and wrong stuff to invest in. You know, sometimes we go with our gut, and there are great choices. There are a lot of people who have made significant gains in crypto over some projects that no one's ever thought of that would make them wealthy, right? But it happens. It does happen, but it's few and far between. Your job is to be smart about your investment, understand what your risks are once you want to get in and you start to get in, and while you're in it. You want to be smart. You want to be able to mitigate your losses and mitigate your profits. You want to take advantage of those positions and then run when you can. The older you are, the faster you run. Get out. Don't play greedy. Don't play young. It's going to keep going up. No. It's a volatile market. I think that it'll start to stabilize after 2025, but that's just my personal opinion. At the latest 2030, you know, but if you're 50 now and you really want to wait for stability in another 7 years, it's not worth it. Really not worth it. If you have a couple dollars, you need to understand what your risks are in investing now, right? If you have $100, that's not a little bit of money. It's enough to get started. Not financial advice. To start out with, depending on your income level, $20 a week is fine. You can do 10 in Bitcoin, Ethereum, 10 in Bitcoin, 10 in Cardano. You can do 5 in Bitcoin and 10 in Ethereum and 5 in Cardano. However you want to split it up, you can do that. This is crypto. With crypto, you have those options. Would they be so meaningful later on? We don't know, because crypto can increase in value so much. So we're expecting another 4x gain in 2025 for crypto, for Bitcoin especially. So hopefully it hits 80,000, 85,000. Maybe it goes higher than that. We don't know. But 80,000 it's a pretty high number for one asset class. That's a pretty high, very high number for one asset class. So just think about that. You know, you invest, if you have the money, 16,000 now, it goes up to 80 grand. You made 60 grand, 64,000. That's a lot of money, right? You 4x'd your original, right? You 4 times your money. So if you put $100 in Bitcoin in 2025, you made $400. Well, you made $300. You now have 400. So just think about that. You know, the littlest thing can grow to be the biggest. Remember that, right? Understand your risk tolerance. Keep mind of your age bracket. That is very important. If you're young, you have the option to go aggressive and risky. As you get older, you become more conservative until you need to really be conservative and not be so risky. So I hope you enjoyed today's video. You watched it all the way to the end. I really appreciate it. If you like the content, please hit that like button. If you want to get notified every time I make a video, please hit that subscribe button. Let's get the algorithm from YouTube to get this channel more popular. Really appreciate you. Black Star, we are the light in the darkness. Peace.